Hi, I'm Tim Brenner. Welcome to Capital Views, and welcome today to Deven Mitchell, the Executive Director of the Alaska Permanent Fund. Deven, thanks for joining us.
Yeah, thanks, Tim, and thanks for having me on the program.
Uh, Deven, the Permanent Fund is pretty important these days. It supports really most of the state budget these days, and there are some, there are some challenges. The fund, Permanent Fund is really two funds. It's the corpus of or the Permanent Fund itself, which is doing fairly well, I guess. And then there is a subset of the permanent fund, which is the part that supports the percent of market value mechanism. That is what drives the money to the state budget. And that is, a lot of people are asking questions as to how well that is doing. Maybe you could sort of explain how the fund itself is doing well and what the challenges are for the mechanism that supports the POMV.
Sure. So first of all, I just want to provide assurance that there's sufficiency in the earnings reserve account to provide for the current needs of the state as well as the forecast needs for the coming budget year, fiscal year 2025. It's really a matter of, as you described, that there's a subsect within the permanent fund of realized earnings. It's statutory net income that flows into the earnings reserve account and is available for expenditure. And that sub-portion of the permanent fund has been drawn down in recent years, in part because of inflation proofing and other transfers to principal, and in part because of low investment performance in that sector, in the realized earnings sector. For the current year, we're on track to earn an amount that's equal to the expenditures that we would expect to occur. And so it's a relatively positive story in the short term, but something that policymakers and Alaskans should definitely be paying attention to.
So, David, now we're speaking of the earnings for the earnings reserve account. How much are estimated, or what would the fiscal year to date be so far?
Our reporting is through November, and so as of November, there were $1.4 billion of statutory net income realized earnings for the fiscal year, which was added to a starting balance of $200 million. So there's $1.6 billion, and that's in line with the assumptions that our advisor Callan projects for us for the fiscal year. Still relatively austere statutory net income will be in more of a break-even mode rather than building fund balance in the earnings reserve account, but definitely not as difficult as last year when we had fiscal year earnings of about $2.5 billion.
And just for reference, how much do we need to fund the outflow from the earnings reserve account for the POMV and other expenditures?
So the percent of market value is based on a historical fund balance. The last 5 years, average balance, 5% of that is transferred to the state each year. And so for fiscal year 2025, that's projected to be $3.7 billion. That amount is set aside. In addition to that, there's an inflation proofing component where we transfer money from the earnings reserve account to principal to ensure that we maintain the buying power of the permanent fund. And that $1.4 billion that was appropriated for 2024 is also set aside. So the $1.6 billion I referenced earlier is available for 2026 expected spending.
And if current trends continued, how much would we need in 2026? We need the POMV plus the inflation proofing?
It would be, the percent of market value would be approximately the same, 3.7 billion, based on the fund value being relatively static the last few years. The inflation proofing amount is calculated based on the actual inflation rate that we might see in the future, so I can't really project that. One of the big influencers of the ERA balance in the fiscal year that just ended was the high rate of inflation and an inflation transfer of over $4 billion. So the $1.4 billion that we're transferring in 2025 and for 2024, I'm sorry, is really a much more achievable target than we have when we have those high inflation years.
Well, Devin, in terms of the overall fund itself, I mean, what is the current value, and are we, what's our return expected this year? How do we compare with other large institutional funds?
So the fund value, there's different values depending on how you look at the fund. So there's accounting values and then there's assets under management. And our assets under management at the end of the calendar year were around $78 billion. The fund's performance this fiscal year has been a tale of two cities. There's been the good and the bad. Luckily, we started off with the bad. So if you look back in October, we actually had negative performance at that point in time, over -2% rate of return. There was a strong rally beginning in November and running through December that as of the end of the fiscal year, at the end of the calendar year, halfway through the fiscal year, we were at a rate of return of 3.85. And so if you extrapolated that rate through the fiscal year, you would be around 7.5% for the fiscal year, which would be a relatively strong rate of return and in line with our performance expectations.
So, and we compare, how do other funds, I mean, one way of measuring how we're doing is how others are doing. There were other large funds like ours. How do we compare with them?
We compare very favorably. We tend not to look at other funds as much as we look at the market. And so we have developed benchmarks that we hold our various asset classes to and our total fund. And we compare our performance to the benchmark performance. As of that same point, midway through the fiscal year, December 31st, we were outperforming the benchmark in our asset classes that are public. The private markets, they have a lag in their reporting, and so we don't have that information until the end of the fiscal year. But relative to our expectations of performance, we're currently outperforming the market.
Well, that's good news. Well, at any rate, thank you, Deven, for joining us, and perhaps we can look forward to future opportunities to keep us updated. What you're doing is pretty important to the state.
Definitely, and I'd appreciate it, and thanks for the time today.